Hi, welcome again to another edition of Market Analysis for today, March 6th of 2025. I'm Gio Benacourt, and this is a recording right about half an hour prior to the U.S. session open. All right, so another day, another tariff curveball for markets struggling to decipher President Trump's trade policy. The move to give U.S. automakers a 1-month reprieve from levies on Mexico and Canada complicated the puzzle. While the move raises more questions, there are several key takeaways from the exemption, both positive and negative. The delay means that the stock market is likely to remain in a volatile tariff-related limbo for a while. The beginning of April could be eventful, with reciprocal tariffs on countries around the world set to be unveiled, along with the new deadline for levies on autos from Mexico and Canada. Prolonging the uncertainty makes it harder for U.S. companies to plan for the future and make investments. It may already be having an impact. New orders plunged in February's ISM manufacturing report released earlier this week. Households may also be feeling more cautious, according to recent consumer spending data. Target and Best Buy warned of prices increase due to the levies. That's the bad news out of the way. On the plus side, Trump's 1-month exemption for automakers perhaps suggests there's a limit to the pain he's willing to inflict on U.S. companies. Ford, General Motors, and Stellantis appealed to the president's better nature, and it worked, at least in the short term. Press Secretary Leavitt said it was so that they are not an economic disadvantage, So the U.S. stock market certainly welcomed it. The three major indices rose more than 1% after 2 days of selling, but Trump has ultimately kicked the can down the road. The stock market companies and consumers will have to wait at least another month to fully discover the scale and impact on tariffs. That means more volatility ahead. And with that being said, I may remind you to keep an eye on the VIX. So a spike on the VIX towards higher numbers 50, that is panic selling. That obviously we're going to be seeing a lot of red across the board, but you obviously see it maintain. So as it climbs, then the selling will most likely is happening. All right, so let's get right with today's fluctuation. Again, it seems that the market is doing the same scenario that is doing here, right? That it did here. Okay, so it seems that now the market is doing it again, but with obviously the volatility included, right? But as you see, we are basically, for the last 2 days, within a range. So today we fluctuated to the downside. Let's see how much more of that fluctuation is there gonna be when the market opens, right? So again, let's look for previous lows as a prior level of support or direction or target, if you will, and then 20,000 is that psychological round value, very important value psychologically. So if that's broken, or if it's violated, will the VIX jump? Okay, is it jumping? So that will give you more conventional, or you're confirming that the movement downwards, or the pressure, the sell-off, the bears are in control. 10% correction, okay, is what is expected from a high. So let's just grab this value as the highest value, 22,317 times 10% minus equals, so that's 20,085. So 10% is what is expected. No, technical analysis speaking, 10% is what you expect for a market to correct, to enter the correction phase after a prolonged movement. In this case, our previous movement was to the upside. We were in an uptrend, making higher highs, all-time highs, basically almost every single day, at least for the S&P. And from that high, then 10%, 20,085. So in the futures market, or actually this candle hit that 10%, 20,075. And the 10% is 85, but 10 points more, 10 points less, whatever it is. But look, so are we going to reverse? We have tried to reverse this previous move, right? Oh, come on. This previous move, we have created a bottom, okay? We are very close to that psychological round number, right? So if we already touched that 10%, shouldn't we already be trading higher? But because of the geopolitical uncertainty, because of what's happening, does that bring common sense to us? Of course, things are gonna, if supplies, are gonna get more expensive for manufacturers. Obviously, they gotta increase the price without bringing inflation. So all of that stuff is right at the base with Trump. So how much lower do we need to be in order to be in a full downtrend? Well, 20% from the all-time high, or from the high, is what from a technical analysis point is that you have entered a downtrend. Okay. So far, we still got 10% more to go. So then you have studied the probabilities, right? So you're placing all the probabilities on which side. Am I gonna go long, short? Am I gonna stay here and scalp? Because scalping is great when you have a running market, and also you could, if you are savvy, you could also do a lot of scalping when you have a sideways trading market, like we have had so far, right? So let's see what the outcome will be. I'm going to speculate we are going to continue to just move lower towards the 20,000. From this level, are we going to come back and revisit that low on March 4th, on Tuesday? Or are we going to reverse once we hit the lower Bollinger Band and reverse the movement? Those are the things that you need to analyze and then make a decision. Here we have the S&P, so let's just lower that level right there, and then we have 5720 as for our resistance. Yesterday's swing high, and I'm gonna use somewhere around here, gonna be in the middle, because I'm also using this swing low just to identify previous long wicks. For a reason, it came down to that point and it rebounded from there. So that's why. So again, also looking for that continuation of movement to the downside for the S&P. Dow, let's just lower right around here. Leave that at 40 to 190. Crude oil. All right, so crude oil, again, we've been speaking about it, how it's trading lower. 65 was that one level we have placed on Tuesday. So 65, I'm using about $1 spread between levels. 68, it coincides with the opening, right around the opening of yesterday's opening. 69. So there's no specific reason. I like doing that. I find it that there's round numbers when you have a running market like you have had in crude oil, which is selling off, gives you a better, just psychologically, confidence in reality. That's what it is. Nat Gas. So we have Nat Gas. Ooh, profit taking could be the reason for that. So previous days. So I'm gonna leave that there. Boom. Coincides 480. Yes, we swing low. And the previous days. I'm going by swing lows and swing lows. It did open with a gap down. So let's see if it'll find that support at yesterday's opening. Gold fluctuating downwards. Oh boy, a whole lot. Let's see upper boundary band, and then bring this up, and the lower boundary band. I'll bring this up, okay. There we have it. All right, so gold. Ooh, this puppy is entering. Basically, lateral movement is governor congestion. Setting up for a good breakout. Oh yeah. I'm gonna favor a breakout to the upside. When? It could be today, later on today, tomorrow. All right, so silver. Just use the upper boundary band. First level of support, 33.5. Second level, first level of support. We are outside. We are over the medium. Okay. Let's use, okay, so let's use a 20-day moving average and that swing low for silver. Now let's use the 50 moving average instead. Right, so we have our support, our targets for today. I think this has already reversed. It's in reverse already. It's going to recuperate all this movement downwards and then make a pop to the upside. Obviously, the dollar index also has a lot to say on that. Wow, so a nice move to the upside on copper. $5 jumps at me real quick. Will we see $5 copper by the end of the month? 450. I'm gonna use 450 and the 20-day moving average. The mean within the your band. Okay, so this could be also a lot of profit taken because this parabolic movement, obviously. But let's see, yeah, $5 is right up here. We're close to it. Going with the momentum. Bitcoin continues to just sustain itself. I'm gonna use 88,088. I'm gonna use the 50 moving average in 96. 96 has been a level of confluence for for Bitcoin in the past. So it's gonna trade above that. That's the target, really. Then we have the euro after nice move to the upside. Is that gonna be continued today? We will see a continuation to the upside on the euro. Well, if the dollar index continues to plummet, yeah. It's the same thing for the pound. We just move these lines so we can find this level of resistance support. So we are walking the upper boundary band. So there's a whole lot of volatility in there. 129 seems to be the psychological level of resistance so far. I'm going to put it 128.5 level of support and 128 round numbers. Ooh. Okay. RSI still below overbought, so still room for another move, leg up. Ooh, dollar index just plummeting, 103. Now, will the dollar index recover? Let's put 105. So as we see that the dollar index has continued to move lower, we see that volatility on other assets, specifically on the forex, on the currencies, and commodities as well in the metals. So as you see that the dollar index continues to trade lower, you'll see that movement or that momentum picking up on those assets. Have a great trading day, and I'll see you tomorrow.